here you go. This is the daily S&P 500 chart, and what we're doing with MMTs today, the new ones, is how do we establish the previous bars, the half bar MMT market maker bars, half of the MMT market maker bar, is that which ones do we look at? And how do we confirm them? Well, this major up bar right here, ultimately the S&P resistance at a much lower high right now is going to be 1182.24 on the first pass, and we're going to use that one. The secondary would be identifying the top reversal half bar here, which is 1193.87. Okay? That's the second resistance area, and that's that first major reversal bar from this bottom up. This was a very bottom up, and the diamonds were there, and that diamonds, they held support. Then you had that diamond pop in your market maker platform, and that diamond was closing above that previous half diamond, and low diamond is where the distance is from here to there. Okay, and that there is strength. But then what is our support levels on the way down is the last up bar is a previous daily bar, or 3 minute or 15 or 60, it doesn't matter, that this would become your current support level. Why? Because this was that daily reversal, but when you broke below here, you broke below the 20-day moving average, and the swing high of this bar was 1185 right here. Yes, it was 1185.37 was the high of that gap down daily bar, and your half bar right here was 1182.24, and when you started to fall below that half price action bar, more weakness was building within the price action downside movement, meaning that everything was contracting, and everything in the platform that it needs to do to guide you through was negatively contracting in the ratio, which supported that short sell. And if that IR was on zero on the individual equities you were trading in the S&P 500 short that day, as you can see, the expansion of that weakness was this major counter trend to this last upside bar. Okay, that's why this last upside bar here to this top reversal, this one here at 1182.24 is your first resistance area right in here, and your support levels are going to come from this major up bar right here at 1142.63. Let us not forget that we closed MMT at 1154.23. Negative 31.67 handles equals minus 2.67% on that drawdown short daily. And you broke below your daily last bar here. Okay? And that was that 1182. The high was 1185, and when you started descending mathematically away from it, it was getting weaker and weaker and weaker, and on a 3-minute chart, you were slamming down, and you were slamming down, and it got weaker and it got weaker, and now we're right back over here. Now, in the short term, I'm going to show you this bar right here. It's 1153.80 MMT. This was your original 3-minute reversal to the previous day bar right here, and that half bar right here was 1140.83 at the time, which is also going to be your next downward support level, MMT. That's going to be support 2 MMT, but this major bar right here was the upside bottom up to these highs, and we took out this half bar right here by 13 handles above the previous daily half bar in the S&P. That meant that strength was changing to the upside. And yes, these are all price volatility little gaps, but you can see over here now that that bar at 1153.80 is sitting close to it. We closed at 1154.23. We're slightly above that. The next one, as I said, would be this red bar of 1140.83. This one comes into play at 1137.21. Why is that, MMTs? Because that was your initial 52-week swing low price action bottom up reversal. And that 1137.21 is your 52-week low half action bar, if we gap down into it and on a 3-minute we start ripping and we start elevating like we did in these bottom up days, these bottom up trend days, and then these were the short down days. But let me tell you that this final diamond right here is 1151.60 now. It was not it was that day you took out the previous day's half bar here. You went miserably all the way down to that reversal and came back up right in here to it. That's nice. Listen, when I'm doing the S&P, then I'm looking at the 1120 put option that was a big breakout up to $80 here. There was a big breakout in the 1120 put up to $60, I'm sorry. And look at that thing come down. That was the whole monthly range. Yes, it was. This monthly range here, the low on the put side of that 1120 put, which is down there at that major critical area of support on the S&P 500. And how do I weight the current price level of the S&P 500 price action weighting to understand that this put option, if I'm breaking those lows and I'm descending in the chart on the shorter time frames here, I am breaking down to these levels, then that means that this 1120 put, yeah, it was a great trade. It's a monthly low of 345 and a monthly high of 2255. Yes, there is a premium close of 1480, but it's still well off the high of 2255. And once again, MMTs, when I go back over here and I look at that 1170 put that was bought down here when the S&P was crushing, these things went from $11.26 to the high of $45, and that's when the S&P 500 was doing something like this right here, when the S&P was weighted to the downside and the diamonds were closing lower. That meant that these put options put a bottom in. They were inflated at $80 a contract. They were wholesale down here. This is the previous last weekly 1126 low, 4510 high, and at the same time they were putting the low in, this was reversing up here and here. And once again, it's about waiting where that S&P is, and this is just a 60-minute chart. And what it does is it shows us the breakout days. It also shows us the breakdown days. But we've got a double handle breakout within the structure. We got breakout, and we have a narrower, diminishing breakout than the original 52-week low breakout, meaning that this one is not nearly as long as that breakout. And we had a major reversal, and we're coming back down. What's going to end up happening in MMTs? Here's a double diamond 60-minute alert bar. Right here, there's a double diamond, but notice that the diamond is slightly above these other diamonds on a 60. And that the lower half is right there. It's at 1153.26. Okay, this lower half bar over here where the burn started, hey, this one here on a 60-minute level, you would fill in your next alert at 1146.62. This one over here where that low, this is where we had a major reversal right here. This half bar right here is 1151 now. And we closed at 1154.23. We're slightly above it now. Mathematically, we're not below it. We're above it. If we can consolidate that 1151 and break higher and hold that as current support level, and we weight that with the market, then we're able to do these nice little things that we enjoy doing. And what are these little nice things? This is a $1,250 up and out of the money volatility call within high super gap open days and gap down days. But if I'm a buyer down here at the very low wholesale market where I told my MMTs off of this video, I get hit there, I know where my exit is, and I make money. But I have to know how the S&P 500 is going to be weighted at support, price action, or price weakness. There is no way around it. I'm going to know that if I break these lows in here, that that my put options are going to continue to go higher. And that 1170 put, I'm just going to let people know this was the one that we've been on. It's on our website. Bottom up, bottom up. You have to go to the S&P 500 days. So if I know what day of the week there were a couple of days in the 5-day period that really caused the most selling now. And we had a big down day on Friday and another down day, 300 down on the Dow. But when we were reversing up here at 1204, we were putting a bottom in here and we were ascending in the value here. And that was wholesale entry here. That was your original big weekly retail breakout. I mean, over here, the lows were like $8.50 and you go up to $81 here. I mean, when the S&P was really failing over here, and when it was really failing up here at 1230, you got a lot of big breakout here in that S&P now on a weekly level on that put side. Knowing that the S&P was weightedly negatively, and knowing that the S&P was in a major reversal, and you had to have a system so that you could verify why it would be weaker and make compounded lower lows in price action and closing down toward the lows, then popping in volatility on the up days, but then rolling over and then eventually making another lower low. And what we're going to be looking at here, MMTs, is how these lows hold on that 60-minute chart. To start with, this burn right here is going to be 1146, and that was on 823. So you know the date and you know the half bar, and at the time you were closing 4.01 ratio above the previous half bar. This was the confirm there, and you broke up to the top. You came all the way back down, but I'm going to tell you that the bottom part, this is the low end, but this part right here is where you would like to see the gap up, and that you get above this half bar on the upside. That's 1165 right here. You need to clear that 1165. You can also say that the next upper bar would be 1175.36, and we have a little bit of a pocket in here of about 1171.43. That's going to be the upside resistances. And just remember, yes, the 1182 is on a half delta, but these are the shorter term deltas that it's going to have to clear. And once again, this bar right here is 1157. This was a high right here on a 60-minute intraday Friday level, okay? And this was on 9.9 right here, okay? And the high of it was 1161, okay? So basically, when we're down here, we're coming back up in here, but I can tell you that at the bottom part of every trade to weight this is you need to see that you get each one of these lines are a quarter line is $9.25 on the S&P. That's a quarter movement. That's each line. And each one of these price actions to build strength and or consolidation must gain contraction. And you got to take out where you see the last half diamond here. You got to pop up above that. You got to hold that on a 60-minute. And some of the other lower diamonds that were major players over here, these are areas right above the teeny line, right here where that diamond's at that teeny line. This is where that big day 60-minute drop was, and that was huge. 1, 2 and a quarter deltas. That's $18.50 there that the S&P fell on its reversal, and everything on an intraday level was descending mathematically, what supported your short. And these diamonds up here on the way up, if you do get up here and consolidate, ultimately you're going to have to consolidate no lower. You're going to have to consolidate this half bar above 1160 right here. And this is a daily bar right here. It's the 5th day up in this route, or the 5th 60-minute bar up. And your daily bars were growing off the bottom too, because it takes so many 60-minute bars to equal that. But this was 1, 2, 3, 4. It was the 5th bar right here. At 1160 is going to be another shorter, just very short-term area that you got to see consolidations above those price action levels, so that you know that you can get one of these breakouts going. Or you're simply going to do this, these big red bars. Or you're going to start with the red reversal bar on Monday, and you gap down with one of these starting the morning out. We don't know what tomorrow morning brings yet, but I could tell you right now, if I'm going to weight the S&P 500 and I'm going to be on a call side or a put side, I'm going to want to understand understand why I'm buying wholesale down here. If I got 10 contracts down here, that's a $35 move. That's $35,000 just on 10 contracts. For crying out loud. They were wholesale here. They were retail here. They were inflated. They had made a big move when we had that big drop below that 1300 line on a weekly level. Yeah, we did. This week right here was 724. We know it. That was 731. We know it. That was the 8-7 week high. Then it started to come down and it started to deflate, and it got back down here to these price levels, well off those highs. Public buys up here, and then they hold them. Most of them will sell out down at the bottoms here. But listen, the thing about it is how do I square that 1170 put? I showed the 1120 put. That's going to be this one right here. They expire on 9/17. And here it is right here, 1120 put below the market. So if I'm going to break those levels or gap down to those levels, what I'm going to be doing, MMT, if I gap down to those levels, MMT, if I gap down and hold that 1120 support area down here, that's 1146 right here. I'm just showing you that. But if I'm well above that and I'm holding 1146, and I'm holding these major bottom lows right here, 1148, and I consolidate and start to tick up, that means that we are building a price action weighted 60-minute half bar. That's the MMT price action bar now. And this is where that last top, and this is the duration. This is what we're going to look at it. When we break it, if we start another one of these red bars like this on the gap open down, so let's say on a level that you are gapping below and you start to go down and you hit down in the levels, then you have to see immediate reversals on the 3-minute chart. How do I weight the longer term S&P 500 using an SMF 60-minute chart and SMF daily chart versus the 60-minute chart? And on that 60-minute reversal here, you can see where it started here and it continued. You see these big 60-minute down bars right here was part of this daily down bar, and you broke that half using that price stability at 1151.60, using the daily price movements of the original 52-week low, bottom special preview for MMTs, waiting the S&P 500. If I break lower, I can get down into areas in the S&P, and we all know those areas. We know that if we break below 1107, that we could see 1098, 1089, 1080 would be 2 full deltas down. You could get down to the 2.5 delta down at 1061 on the S&P 500 in that lower channel break. Now, the most important relevant thing that we are going to do is to measure that price action strength and weakness within the general high volatility band on trading calls and puts on the S&P 500. Let it be knowing on how to weight the S&P price action and what will be the common denominators, what will prove that strength, which way, what side of the market to be on here and now, and all the reasons why.